Welcome everybody to this webinar titled Securitization of CLOs CDOs, a new dawn for Luxembourg. And thank you to LuxCMA for organizing. For those who do not know me, I'm 𝗟𝘂𝘅𝗧𝗠. I'm a director of Trustmore in Luxembourg, and I have now more than 15 years experience in structured finance and capital markets. I'm pleased to welcome our panelists, Andreas Heinzmann, partner at the law firm GSK Stockman, 𝗍𝘠𝘠𝗄𝗄, partner and country head of the law firm Siemens & Siemens. We have also Rolf Caspers, global head of capital markets at Sun, and Maximilian Portenlänger, head of securitization at 𝘗𝘃𝗲𝘀𝗄𝗃, a bank where tradition meets future. So CLOs, CDOs. CDO stands for collateralized debt obligation, and CLO stands for collateralized loan obligation. Generally speaking, they consist of orphan SPV issuing liabilities in tranches, which are backed by a portfolio of leverage loans, CLOs, or loans, bonds, ABS, etc. for the CDOs. They can also be unitranche. So the portfolio is managed by a collateral manager, and the notes issued are typically listed and rated. CLOs can be issued by securitization vehicles because they repackage the underlying portfolio. The CDO is the term that has been associated with toxic assets, while CLOs have proven to be resilient and great contribution to the economy. CLOs have indeed and ironically proven to be strong performers, not only at the peak of the 2018 financial crisis, but also throughout the COVID-19 pandemic, where they worked more or less as marketed and anticipated. However, whilst Luxembourg was seen to be the CLO preferred jurisdictions prior to the crisis, following the crisis, and despite the revival of the CLOs the last 5 or 10 years, the most EU popular jurisdictions were consistently the Netherlands, even if not anymore, and Ireland. So why is that? Solid legal framework, favorable tax regimes, well-regulated jurisdictions. Today, our panelists are going to articulate how the modernisation of the Luxembourg Law of 22 March 2004 on securitization is ushering in a new dawn for Luxembourg in CLOs transaction. So my first question will be for the lawyers. What does the new law change in terms of financing and security rights in case of default? Perhaps, Andreas, would you like to start?
Sure. Thank you, Alexander, for the introduction, and good morning to everyone to our LuxCMA webinar on CDOs, CLOs. And before we are talking, so to say, what the amendments of the new securitization law mean for the active management of CDO CLO structures, we wanted to highlight again some other key changes of the law, which then also contribute to the proper structuring of a CDO and CLO structures. And let me start maybe, so to say, with one of the key amendments of the new law, which relates to the broadening of the financing possibilities for a securitization entity. In the previous law, we had a reference to, let's say, the issue of securities by the securitization vehicle to get the funding into the compartment or into the structure, yeah, pursuant to the CSSF interpretation, securities in that sense meant transferable securities under MiFID. Given that we did not have a legal definition in the securitization law what so to say, the security is, that led to some or created some ambiguity also with regard to foreign instruments governed by foreign law, which not necessarily would qualify as a transferable security. And that has now changed. We have now a definition in the law which refers to financial instruments, which is much broader and which covers then also other instruments and not only strictly speaking transferable securities. So that provides for further, so to say, flexibility. And another major change is that now, unlike than in previous, or unlike under the previous law, we can now finance a securitization vehicle also via 100% loan financing, which is, I think, in particular for banks quite interesting. We will come to that a bit later. Previously, so to say, loan financing was only under certain circumstances possible, and certainly not for the lifetime of the structure. So I think also here we have now, let's say, a better flexibility, and that will also now contribute to, so to say, the setup of CDO CLO structures.
Yes, the flexibility is also in terms of security package that can be granted to other participants to the securitization, other participants than the investors. Louis-Maël, would you like to elaborate on this aspect?
Thank you very much, Alexandra, and good morning, everyone. Just to carry on with the description made by Andy on the changes in the law on securitization vehicle, there has been also a greater flexibility adopted in relation to security package, and we will come to the fact that it is of interest for a variety of players at a later stage. But initially, the security package and any kind of pledge, debenture, security interest granted over the underlying assets were only available in short to the note holder, which created a quite complicated structure, especially when Andreas mentioned third-party lender such as bank. We had some structured cascading security interest where you had, for instance, third-party banks granting loan to the note holder to benefit in case of event of default of the security that was initially granted by the SPV to the note holder to then access the underlying assets. This has changed, and it's a good evolution in the law, since we will be able to simplify certain structures, especially in the PE world, private equity world, when you would have third-party banks able to lend, to provide financing directly to the SPV and benefit from a security package over the underlying assets. And this is a great, I think, a great amendment to the law. And when we come to the interest in doing that, and I think, Andreas, we can probably also pitch in, both of us, on this aspect about first the financing, because for certain institution, either financial institution or third-party player, having notes issued by an SPV in their balance sheet was not ideal. They wanted to be exposed only through loans, so that's a possibility now. Since the loan will now be able to be directly secured, there's obviously some advantages from a regulatory capital perspective. There will be simplification in terms of structure. There will be a reduction of costs, legal costs, notably. So that's really enhancing the market for Luxembourg and simplifying the market for Luxembourg, especially when we refer to the cascading structure. This provides also legal certainty, because although we were using the cascading structure, it was seen by certain players as a bit aggressive in terms of the structure. So now it's no longer the case. We have a clear path here. And when I mentioned the private equity houses and the interest for them, that's really in the third party financing and the bank financing that we can see that. Obviously, there are benefits also for all the CLO, CDO structuring. but we can see the primary impact and the interest of certain of our clients directly on the financing side. I don't know, Andreas, whether you've seen something similar in this area as well.
Yes, indeed. I think now, let's say, indeed, with regard to banks, we have, let's say, a much broader toolbox because banks clearly, with regard to loan financing, they are ready because they do not need maybe to allocate a mark-to-market evaluation for certain securities, like it would be the case if they would hold notes issued by the securitization vehicle. Alone, they can, for them, it's just easier. And I think an important point is also the one you mentioned with regard to the regulatory capital exposure, because indeed, if the loans are on top of that secured, it may even then help them to get a reduction with regard to let's say the underlying of the loans with tier 1 or tier 2 capital. So overall, I think for a bank, for investors from the banking world, that creates certainly some advantages, and we have already heard from banks that this is of interest to them.
Talking about banks, Max, as a banker, as an arranger, how are you looking at the future of this type of financing in capital markets? How securitization or CLOs can be a solution in financing the securitization, also perhaps of PE funds?
Definitely, and Alexandra, thanks for handing over the question, and also thanks for the discussion which we had, where we had a deep insight into the legal framework of this. And of course, those are topics where we are always in touch with, especially regarding the capital markets. And we nevertheless have to mention that comparing the US capital markets and the European capital markets, here we are still way weaker in capital market financing, and there is an increasing need for capital market financing here, especially, as you mentioned, looking at private equity firms, but also for the small and mid-cap companies. And I think we are convinced that securitization is one way of bridging capital market financing and increasing this, well, just the share of capital market financing. As you asked regarding, for example, private equity transactions, I'm fully with you that the amendment of the law, it helps financing those transactions. And for example, from a banking perspective, now bringing the legal discussion which we had into a practical discussion. To keep it simple, we can go more into details later if it's required. For example, private equity fund wants to issue notes to the investors, which are profit linked. And there is also a private bank who would like to be the arranger of the transaction and want to help in the placement. With the amending law now, we can manage it that we have warehousing of the private bank, and they have 100% warehoused, and afterwards the notes are placed to the investors as soon as we have the investors committing to this investment. Why is it this way? Because in practice, if we are structuring a transaction, and that's where I'm coming from, we are not always in the end picture, and it's not the case that all investors are just waiting for the transaction to be ready. As it looks like 2 years later, we have to go into the structure partially. We have to find investors after the seed investors committed to this project, and then investors come in gradually. And especially in this case, it's very important that the new law approves or grants more flexibility to the arrangers from a legal framework. And I think that's a way how we can strengthen capital market financing for small mid-cap, but also for private equity funds.
Thank you. Rolf, as a software service provider, do you experience the same trends? Have you noticed an increased interest of your clients for this type of financing or structuring their CLOs through securitization vehicles?
Thank you, Alexandra, and hello, everybody. Yeah, I do indeed. I mean, the credit market has been improving over the last few years significantly. The US being a little bit more ahead in the curve than Europe, most certainly. But you know, there is a clear need in the market to fuel the economy, to refinance the loans, or to activate the credit market in Europe. So the CLO solutions are spot on in that environment, and Luxembourg having now a solution to support that is obviously very positive. Especially since you know, we unfortunately lost the Netherlands in that to that extent in terms of being a place for CLO jurisdictions. The second element I would say is that drives in the favor of probably both Ireland and Luxembourg is that from a US point of view, Europe is very attractive for both investor side and also from an asset side. And with the EU having put the Cayman Islands on the grey list from a tax point of view, a lot of these European investors will not be able to go through the Cayman route anymore, and hence they will look for either Ireland, Luxembourg, or maybe offshore Jersey solution. So having a solution in our toolbox in Luxembourg is absolutely important. I think the changes that have been introduced, and Andreas and Louis-Maël alluded to those key changes in terms of financing and the security package, are spot on in terms of what is needed by the market. What I can tell is that our clients are very keen to learn more about these solutions. If you compare the cost of a Luxembourg structure towards other structures, Luxembourg plays out to be, or ends out to be, cheaper if you do a certain amount of transactions, simply because you can use compartments and you lower the overall cost. And I think we come to that a little bit later. So very positive feedback, indeed.
So yes, it looks like the change in the Luxembourg Securitization law will have a positive impact and will be very attractive for those US managers and EU managers, for private equity structures and bankers in general. So this law provides a legal framework and flexibility, as you already mentioned, and one of the principal attractions of CLO structures is the flexibility of their capital structure. They can create scores of different risk profiles depending on the credit quality of the underlying collateral. So Andreas, how the new Luxembourg law can contribute to the development of more flexibility and efficiency?
Well, I think one important point is obviously the investment vehicle, that the investor is familiar with the structure. And I think in the so to say previous law, we had a number of corporate forms which were eligible to qualify as a securitization vehicle. We had the public limited liability company and the limited liability company. Probably those two were the most often used investment vehicles for securitization transaction. Then we have also the partnership limited by shares, and then also maybe to a lesser extent used the cooperative company. But we already had, so to say, four investment vehicles for these structures. I think now for CDO CLO structures, not only, but also for these type of transactions, the additional corporate forms which have been introduced by the new law are important. Maybe so to say, I will just mention two of them. So we have the common limited partnership now, and also the special limited partnership, meaning two fiscally transparent entities, add also onto the possibility to use a securitization fund. But those two limited partnership, the common one and also the special limited partnership, those entities are known to PE and PE investors, asset managers, and I think it's good that we have now these additional corporate forms available, not only for CDO CLO structures, but also for these type of transactions. Now these vehicles can be used.
So Louis-Maël, what would make the difference using, for example, a partnership under securitization law compared to the commercial law?
One of the main, I would say, main feature of the law that is really valued by our clients or market player is still the compartment. On that front, it didn't change. The law didn't change the possibility to set up different compartments. But I wanted to remind and to recap a bit how it is structured for the benefit of everyone. So compartment, first in Luxembourg, and that's one of the reason why Luxembourg is so famous for the securitization market, or at least the repackaging market, is the possibility by a simple decision of the management body, or for the new forms by the other management company, to set up compartment at the level of the vehicle. So it's quite easily set up, and each compartment will constitute a legally segregated pool of assets, and each compartment are legally segregated from each other, which is a great feature. You can see that in other jurisdictions there is a contractual segregation. Whether or not this will be affected by bankruptcy of a part of the vehicle or not is a question for those jurisdictions, obviously. But at least in Luxembourg, we have a certain legal environment and legal certainty around the segregation of each compartment, which in relation to CLOs, CDOs can be of a great advantage as well. Andrea, or you, Alexandra, you mentioned securitization and possibly the trenching for CLOs, which is still possible, obviously in Luxembourg. But what we've seen in the past, and the question we receive from our clients are also in relation to unitrench for CLOs, because of the possibility in Luxembourg entity to create compartments that are legally segregated. So that's a great feature and simplify a lot of the usual question around bankruptcy, liquidation, how the liquidation of a compartment or a pool of assets can affect the other one. Any type of default may affect the entire structure. So this is not necessarily the case with the Luxembourg securitization vehicle. I wanted to mention also briefly, but very briefly, the fact that the Luxembourg vehicle can or cannot be supervised by the regulator. And just as a reminder, normally a vehicle that is issuing instrument having a minimum denomination above 100,000 euros, or that is issuing only to qualified investor on a private placement basis are not subject to any regulation or supervision in Luxembourg. There is very little number of vehicles that are supervised by the CSSF. I haven't looked recently, but I think it was 31, while you have, according to figures, more than 2,000 securitization vehicles. So that was briefly to remind that around the applicable regulation or supervision.
Thank you very much. So we can again see how the structuring via Luxembourg, the use of compartments can contribute to the flexibility and the efficiency of the structure. Talking about CLOs transaction, well, CLOs transactions are possible in Luxembourg. It implies active management, and active management is restricted to private placements. So you touched based upon the supervision of the CSSF. So those structures will not be under the CSSF supervision. So perhaps we can now speak about more the acquisition, the underlying assets, how we can, you know, how this law make Luxembourg attractive. I will ask a question to you, Max, perhaps again, as a private banker, and I know that you structure some deals in Luxembourg. How are you looking at this type of capital market products, talking about the CLOs?
Sure, thanks, Alexandra. And let me also catch up there where you left about the advantages of Luxembourg. And let me also mention that it's not purely by chance that we have our structured finance vehicles in Luxembourg. When I came to Bankers von der Heydt, it was also a goal to build up structured finance, and I'm also responsible for this now. We've looked at several jurisdictions, and then we saw exactly because of those advantages which you mentioned, that Luxembourg might be the right place for this, not only because of this legal certainty and of this flexible framework, but also because Luxembourg has a good standing within the European Union, and it's on a financial hub, and you can use it for efficient capital market financing structuring. Now, Alexandra, as you mentioned it, we had some changes in the law, especially with regard to the active management, and those are also the transactions where I'm talking about. I'm not talking about transactions which are issued to the public. I'm talking about private placement transactions, which are over the minimum denomination of 100,000. And in this case, I think that it's very important and very efficient that active management is now allowed under certain restrictions on the levels of the underlying assets, because then you do not need, as you would need it before, you do not need a double layer structure. And when you have a double layer structure, from a perspective of a range in the transaction, you're always waiting for the first layer to complete the audited financial statements. Afterwards, you can complete the audited financial statements for the second layer. And that's not only for the audited financial statements, that's also when you have some value gaps or whatsoever. You always have to account for this first layer and wait for the final accounting of this on first layer until you have it in the second layer. That's not only quite cost intensive, it also stands in the way of real-time valuation. And when we are now talking about efficient capital markets, when we are talking about digitalization, I think real-time valuation and all those kinds should be addressed. And when we have a single layer structure with active management, we have at least a legal possibility to do real-time valuation, and now it's only so
thank you, Matt.
Very important for this. Yes.
Thank you. I saw you, Rolf, moving the head in the same direction as Maximilian. So let me ask you, what is your exposure to CLOs? Perhaps also via fund structure, I don't know, but what is your exposure to this?
Well, I think we said it at the beginning, CLOs are not new to Luxembourg. You know, we did many CLOs, and I personally did quite a significant amount of them. So it's something that's well known in the market, and you're right to point out that Luxembourg is also a very important market for loan funds. So on the substance of the management of the underlying, it's very much the same. I would like to add something which may be well known, and it's not in the new law, but just to point it out that, of course, in Luxembourg you can apply only Luxembourg law documentation if you wanted to, as opposed to UK law documentation, which you also can choose if you want to. And you also can choose different languages of your documentation, which may come handy if your investor base is based, say, in the DACH region, where German language may come handy. You know, it's just these are features that existed already. I just wanted to point them out since I heard Max talking about the investor base. That's quite important. So coming back to the experience in the market for CLOs, I think that this is very well established. You know, we've been servicing these type of structures for you know, probably more than 2 decades now. Maybe less so, where the law wasn't extremely clear on the active management element, even though we also had CLOs since, maybe less active. And overall, you know, to the comment I made a little bit earlier about the different jurisdictions offering solutions to CLOs, it has to be said that in overview, Luxembourg has probably the most flexible solution for arrangers and investors, going from, as Louis said, from regulated to unregulated, from local law to international law, and to EU securitization or non-EU securitization. So there's a great level of flexibility to structure a product exactly to the needs of the investors. Which increases then the ability to attract new investors. Max, you mentioned it, you know, you don't necessarily have all investors lined up when you structure the product. You want to make it as attractive as possible and as broad as possible to attract as many investors as possible. That is where Luxembourg makes a difference to the other countries, I have to say. And in combination with the rest of the toolbox in Luxembourg, I think that's quite attractive.
So let me ping pong to you, Max. What can we do from a market perspective, and how the economy might benefit from Luxembourg securitization transactions?
Thanks, Alexandra. Well, how can the economy benefit? I'm convinced that, as we said, capital market financing is a way to go, especially when we are regarding the small caps and when we are regarding, for example, the non-rated transactions. There is an increasing need for capital market financing. What can we do? I think what is left to be done is, especially for those transactions, as we are talking here about quite cost-efficient and flexible structures, that we have to bring the awareness to the market that there's a quite straightforward way to go, because this way exists. There's a quite straightforward way to go, and we have to find a harmonization from the investor side to the arranger side and to the underlying assets, where we say that's our framework of doing those transactions, and all parties which are part of the transaction can rely on this framework and know that it's a cost-efficient and good way to be done. Because on the one hand, yes, Luxembourg offers quite a lot of flexibility, and we really appreciate this flexibility. On the other hand, when, for example, I'm in touch with the guys who want to arrange a transaction, maybe they're sometimes overwhelmed with those flexibility, and they don't know which option to take. So when them on the line, this one exists, how to do it, I think that would be quite helpful. Of course, it takes some time to do so. Of course, it takes some time to educate the market. But I think that's one of the goals of the Capital Markets Association, and should be one of the goals to all of us to do so.
Thank you. I believe we can conclude that CLO transactions have been conducted in Luxembourg for decades, as mentioned by Rolf, but by Louis and Andreas as well. And therefore, it follows that Luxembourg stakeholders have the tools and the know-how to rapidly meet the growing demands of the market. So GSK and Cement confirm that law firms have a clear understanding of what the market requires in terms of structuring, flexibility, and documentation, as you mentioned also, Ralph. And corporate service providers such as SAN and Trustmore have the human capital with the relevant expertise and knowledge from many years of involvement in CLO transactions. And for players of the banking industry, such as 𝗪𝘃𝗪𝘀𝗪𝘂𝗪𝗪𝘃𝗪𝗪𝘃𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪 Luxembourg CLOs represent a very attractive business to arrange because ultimately they provide affordable and cheaper credit to non-investment grade corporate entities and also multi-family offices in Europe. So this further significantly fuels the economy. We mentioned that earlier, and creates hopefully employment opportunities in various disciplines. So for this reason, CLOs, Luxembourg CLOs are very important, and Luxembourg now has the legal framework and the skilled environment to contribute to it. The panelists, would you like to add something before I check the question from the audience?
Probably, if you allow me, Alexandra, just a few words about the market as we see that, because we already, when we discussed with Andreas a bit earlier, we already, and I think that's the same for Rolf and obviously Max and you, we've seen a lot of requests from clients. We're already setting up some structures because, I mean, actively managed certificates or CLOs are known to the players. They are especially known in other jurisdictions than Luxembourg, even though we did that a few years or a decade ago. It slowed down a bit, but now it's ramping up. And the way you can structure a CLOs, an AMC structure in Luxembourg is no different from the one you already familiar with an independent portfolio manager appointed to actively manage the underlying assets. Obviously, the limitation that we have for AMC structure or actively manage underlying is not to issue the notes to the public, but this is generally a market that is quite sophisticated when you have institutional players, so it's quite easy. But the structuring will be exactly the same that the one you see in other jurisdictions for AMC structure. But we have the compartments and we have other tools also that can bring a little advantage to Luxembourg, and other jurisdictions have also their own advantages. But it's really the possibility for all the market player to have two different platforms in two different jurisdictions, or to choose between different jurisdictions, providing advantages to that market. And I know I talked too much, so I will stop there.
Yeah, so I have two questions, very interesting, based on what you just mentioned, Louis-Maël. So the first one is, if active management was not allowed, how Luxembourg was dealing with CLOs over the last 2 decades?
Oh, that's a very good question. Andreas, do you want to go on it then?
Yeah, I can briefly respond to that. I think we already heard that, so to say, in the past, these structures, they were known to the Luxembourgish market. I would say until the AFMD has been introduced to Luxembourg law, because as one of the consequences was that the CSF said, well, for a Luxembourgish securitization, the sponsor or the manager needs to follow a so-called buy and hold strategy. And then the question was always, can we do daily trading, or can it be on a monthly basis, and what is it actually? And I think maybe the CDO CLO transaction in Luxembourg, they slowed down a bit, but there was always, I think, some structuring element available to make this transaction happening. But clearly other European countries, they implemented the AFMD in a different way. And therefore some of these transactions, then they went just to other countries. But I think here Luxembourg now makes a major step back, because I think it's a very interesting asset class, and the Luxembourg toolbox, I think, is about making tailor-made products for investors and arrangers. And I think what we can do now with the elements of the new law, I think here we are perfectly, so to say, prepared to continue on that path and also become again a player for CDO and CLO structures.
And perhaps to add on that, and I entirely agree with Andreas, the pivotal moment for the CLOs market in Luxembourg was 2013 when we implemented the AFMD, and the position of the CSSF also not having an actively managed underlying pool of assets, which has now obviously changed with the new law. And this is why we call it a new dawn for the CLOs market in Luxembourg.
Thank you. The other question I have is the following. Do you believe that Luxembourg CLO securitization is an alternative to loan funds or the way around?
Maybe I take that. In my view, they are partly competing because they look at the same assets, but they're also complementary in many aspects. So first of all, I think from an investor point of view, the sophistication of the investors has increased ever since the last decade or two. Investors are demanding multiple options. With the same risk exposure. So having a CLO structure in a portfolio to service a certain amount of investors, maybe more professional or institutional investors, is important. And you can combine that with your debt fund. You can set it aside. I also do see a number of debt funds investing into CLOs, CLO notes, simply because they bring some elements that are attractive. Imagine you make just playing around a little bit, but imagine you make a green bond listed CLO note. That is a very attractive investment opportunity for many funds that want to boost their ESG compliance. So there are a number of combinations that are interesting. So I wouldn't, to sum it up, I wouldn't necessarily see them as competing simply because they have the same assets. I would see them as very much complementary to each other, but I wouldn't expect the one to replace the other.
And also and sorry, I'm still talking too much, but anyway, yeah. Also, since you have, it depends also on the market player. When you have institutional investor familiar with a securitization platform, they're used to the way it's working, they like it. When you have PE houses more familiar with fund structure, asset manager more familiar with fund structure, and also their investor familiar with fund structure, they will not necessarily change the way they approach that because they're very familiar. That's a clear path, it's tested, they know how it works. So while they're competing, they're also addressing or targeting different players and different investors type that are more familiar with one structure or another one.
And adding here, that's also exactly what I've seen on the market when people want to arrange such a transaction. It's always the same. You have some underlying assets and you have an investor who wants to participate on the underlying assets. And there is a legal toolbox in between. And there is one world which is more into the fund world. The other world is more into the world of securitized assets. And there, mostly legally, both the investors preference and they arrange what to do. I think what we can look at is sometimes it's more cost expensive to establish a fund compared to a securitization transaction, especially when you are having several issues. And then the parties can act very, very cost efficient. And I've seen some players in the markets using this to their advantage.
That's a very good point, Max. Of course, in a fund, you would need a depository, you need the management company that adds additional costs to the structure. Absolutely, totally agree.
Do we have time for a last question? I believe so. Do you see more interest in combining debt funds with Luxembourg securitization?
Very short, yes.
I can confirm as well. I think we have seen a lot of double layer structures in the past, and I think that is also going to continue. I think nowadays asset managers, they typically they offer to the investor both an access via fund structure where the investors can put in equity, and maybe also investors they have a preference for security, and then so to say we these managers they have also their securitization vehicle. So I think that's something which is quite common and has been established over the years, and that's certainly something which will not go away.
Okay. Thank you, everybody, for joining. Thank you to the panelists for your contribution. If you have questions, I believe you can contact either of us separately or via the LuxCMA. So this webinar has been recorded. The video will be available very shortly. I hope you enjoyed. I hope that it has been useful, answered to questions, or triggered interest at least. And yes, I wish the best future to Luxembourg CLO transactions.
Thank you very much.
Everyone.
Thank you all.
Bye bye.
Thank you all.
Thank you.
Thank you. Bye.
Bye.